Welcome back. Today we're talking about Seeking Alpha. Seeking Alpha is a webpage that I use on a daily basis in order to find stocks, in order to just find news, in order to keep track of my portfolio. Why don't we dive right in? What you see in front of you on the main screen here is Seeking Alpha, and this website is nothing short of an extraordinary. I love what the people have done over here. It's data is organized in a better way than anybody else that I know out there. Well, there are some other services like Finwiz. You'll notice that webpage opened up over here. It's these guys here. That's also an excellent source that I've used over the years and I've shown you before. But today we're speaking about Seeking Alpha and what it does. Well, not only does it give you the news, it gives you all the fundamentals you could ever need on any stock. If you were to look at something that I've been picking at or looking at for the last little while, it's Neocorp Developments. They are a mining company currently developing the only location that has niobium and some other rare earth minerals that are not available or not produced anywhere else in the United States, and they're about to start within the next 3 years. They're actually in the process of setting up the mine. And so I've purchased some of their stock in the past, and you can go through a multitude of information here on this and make your decision whether or not you like the stock. Financially, the stock may not be the most stellar. Um, you know, they're not really making money because there's no active production. They're constantly investing their money into things like development and trying to set up this in the future operating mine, which has good things coming. So that's niobium. But let's get back to or Neocorp, sorry. But let's get back to what Seeking Alpha does. First and foremost, on the front page of any stock, if you were to enter Apple, obviously this is going to give you Apple, but it gives you a summary of the stock, and just on the front page, you get all the latest analysis, all the latest news. And yes, this is news that's been compiled by Seeking Alpha, and it's Seeking Alpha News. This is the one I choose to look at. But there are others. It's based on filters, whatever you want to choose in this area. Sorry if I'm not looking straight at you because I'm using the bigger screen on the right side, and that's the one I want to show you. Um, it gives you the dividend grade, a quant rating, factor grade, rating summary, and going through all of these and how they work is redundant because I can't explain them as well as the videos that they provide on the web page itself, free to watch. You don't have to subscribe to anything, just see what they offer you for free, and the free information on this web page is amazing. But also what I get for a subscribed version is nothing short of extraordinary. I absolutely love this web page. Um, it gives you access to all kinds of webinars and just eons of information. Anyways, you can look at the company's seasonality. You can look at Seeking Alpha versus Wall Street. So there's an algorithm within Seeking Alpha that rates the stocks based on quant versus Wall Street rating. Whatever. It's nice to have both. You get to see what the bulls and bears have to say. And mind you, this is only on the summary page. Company profile, what do they do? Where are they based out of? How many employees, what year they were founded, what their address, their phone number, their revenue. You can look at quarterly, annually, and overall, obviously, we're trying to find something that's trending up, which in terms of Apple, obviously. Earnings estimates, earnings revisions, valuation, growth, profitability, momentum. One of the biggest things that I look at is return on the equity. Anything above 15% is a good thing. That's the thing I've added over the last couple of years by, collaborating with somebody else, and they've suggested look above 15%. Now I'm looking on that, and I'm doing okay, as you'll see. Um, it'll give you the market cap, all the financial data you could possibly think of, and this is page one. Now, insider selling and buying. This is an interesting thing to have, and it's all neatly organized for you. Essentially, what I look for here is any big purchases or sales by one of the CEO, CFO, anybody on the board of directors. If they're selling, these guys know ahead of time that there's going to be trouble coming. And by law, they actually have to legally post this. And this information is publicly available if you know where to look. It's not easy to find. What Seeking Alpha does is they organize this information for you all on a single page, and you get to deep dive by not even flipping in and deep diving into any one of these, which dive deeply into any one of the squares that you see over here. It just breaks it down for you and gives you the reasoning behind the numbers, which it's mind blowing to me. I absolutely love this website. How many times have I said that so far? Ownership. Who actually owns the biggest chunks of the company? You know, their peers, the guys that are in the same business as the company mentioned. The risk, what's the shorted, how many people are shorting this? So chances of being wiped out by a spike, or as they call, oh, I forget now, terminology, doesn't matter. Transcripts. These would be all their earnings transcripts, and you can click on any one of them and actually listen to the live calls, which are also transcribed into a paper format, which you can print out and follow. SEC filings. There's, we mentioned that by law, anybody within the company that's trying to trade, they have to publicly make that information available. You just go under ownership, and all that information is all going to be here. Statement of changes in beneficial ownership. You click on that, and I mean, you'll get the actual document and how many shares were purchased or sold or who did it. And this was an officer, Mr. Adams Catherine L. Mr. Sorry. I believe that's a she, and I apologize. Um, Form filed by one reporting person. This would be her. Um, yeah, and the amount of shares. So if you figure out how to use these, we can dive into that, how to properly read this chart here. But for now, let's just focus on what's given, not how it works, because I could deep dive and turn this into a 12-hour video. But as a starting point, and I'm not capable and like, sorry, I had to go get some water. Yeah, so let's back to the summary page. What else did it give you? The income statement, the balance sheet, just a quick glance at what their financials look like. Income statement. You click on that, and it gives you a deep dive, like going back 10 years, graphically represented as well. Very easy to read. You can see Apple's income has been steadily growing over the last 10 years, and it's a winning company. We all know that. But we have long-term solvency, anything that they've borrowed that they need to pay back. And now that's all on page one. And this is just a breakdown for a single company. And I mean, you could go through, I don't know, Berkshire. Let's look at Berkshire B and how that's doing. And the information on that is just as deep, you know. But then let's dive into the ratings. And it gives you the upgrades, the downgrades, where they're failing, where they're winning. It's just great. Uh, Rated by Quant. Once again, financials, once again, that's what we can look at over here is also quarterly or quarterly by 12 trailing months. That's the one I like to look at personally. It just gives you that, is the momentum growing or is it falling? And here it is. The momentum actually is dwindling on them, even though even though they have been performing really well. If you look at the numbers here, just the net income, what's left at the end after, all this expenses and blah blah blah, it will show you at 96 down to 73 down to 67, and in 2024 around September they've done 106, and that's 106 billion um, in profit or net income. But since then it's been 88, and then 3 months after that it's been 80, 3 months after that it's 62, and now the trailing one seems to have picked up above 5 billion, but yet that number is still relatively close to what's well below 106 from what I was seeing, and that was their best quarter, and that happened in 2024. Um, so I don't know. Is it a turnaround for Apple? Is it time to and these numbers over the last 24, 25 will reflect it. Apple would have stagnated, and I'm not even looking at the summary, nor do I invest in Apple. But if I look at it, it will be like a bow instead of a price rising straight up. And look at, well, we need to look at 5 years first and foremost. This was just 1 year. But since 2024, you see that bow here? It's not steadily climbing. It's a bow. It's like it's been hovering around the same price. And if you go back to what we just looked at, the numbers reflect that. And so does it show me that there's going to be a big price run up? Not really, because like these numbers are just not. They're showing that bow. There was a high peak, and then it's just slowly kind of hovering but down overall. So you go back to the chart, and that's exactly what we see here. It's like it kind of maxed out and it stayed around the same area. Like it went up a bit, but then it went back down, and then it's just hovering around that 500 mark. And the numbers reflect it very easily. So what happened since then? Well, around here, around May, I think May 1st or something like that, the old man had stepped down as the CEO, meaning Mr. Warren Buffett stepped down and he became one of the members of the board of directors, but he was no longer the CEO. There was another gentleman, I forget the name, who's currently running the company. Like I really don't remember names all that well, but everybody remembers Buffett. He's been trained, and he knows his stuff, and he's been running the company since well before then. But because Warren Buffett stepped down right here, the price has slid for a while, and now it's the numbers show it themselves. There's some spikes, there's some lows, but overall the numbers have been down. And so if you look at the financials, that reflects everything. And one of the biggest numbers to look at is the income. At the end of the day, are they profitable? If this number was negative, I would definitely not be putting my money on it. But since these numbers are high, yeah, maybe this would have been a right time, like around here, to invest in that. But definitely not when you're starting to see these numbers dwindle, because that reflects in the earnings in the end. Earnings start to dwindle, earnings per share go down, investors pull up because they're making less money. Hello. So that's just the financials. Then we have earnings. We have your estimates, summary overall, once again, and then a deep dive into earnings estimates. And you can see all that. Earnings revisions, analyst revisions, like are people revising this thing to climb up, or are they seeing this thing as a loser and it's going to climb down? So earnings revisions, there's that. Earnings surprise, that's a nice number to look at. And I mean, it's all visually and data organized. Just you can deep dive in on anything, going back years and years. And I'm just looking at Berkshire B here. This is done for every single stock. Once again, quarterly and annual, you can choose which numbers to look at. You can look at your dividends. You can look at, this company does not pay out dividends, but others do. Like if we went to Apple, Apple does not pay out dividends. Microsoft does not pay a dividend. Oh boy. NB. Oh, never mind. SPY, they pay dividends. There you go. All right. So here's a dividend. You can go by dividend yield, by dividend growth. I mean, there's just info upon info upon info. It's their financial data dissected and given to you on the table right in front of you. I call this my newspaper. Never mind Wall Street. This is where I get most of my ideas, and we'll dive into it. I mean, you can look at the peers once again and compare their charts. Um, there's just so much you can do with this. Look at a 10-year performance, like who's actually, if you're looking at a long-term investment. I try to stick around a year and I call myself a long-term investor, but if something is doing really well, I'll hold it longer. Right now, currently, I have one, which is like a year and 4 days. That's the longest one I've held because usually they turn around, they start, not making so much money, and I pull out of those once they lose about 10% from their highs. You don't want to hold on to it forever. If it's going to turn around on you, pull out, take profit, and open something else that makes sense. Maybe even short what you just longed, but not necessarily because the financials wouldn't change that much. But there's also an option of doing that. There's also an advanced way to look at, like this is a wrong one to look at here, but if you were to look at niobium, what's their performance versus the S&P 500? And Neocorp has done 321% versus 16.89. Meaning, if you were to just go and invest in S&P 500 last year or over the last year, you would have returned almost 17% here. Or if you were to invest in Neocorp, you would have had 321%. So this is a good metric to look at in terms of, do I buy gold or do I buy a mining company? Well, let's go back. Let's forget about Neocorp for a moment. Let's look at gold. Why would I not want to buy gold versus a mining company? Here's a mining company here's a spot price of gold, and in 1 year it has returned 70%. That's great. That's amazing results. But if my exposure to any single stock is less than 5% throughout my whole portfolio, because I have something like 60 something stocks that I'm following. There's a long only portfolio of stocks that are absolutely stellar. And there's my long and short portfolio in a margin account, which I can long and short. And it's just a different way of approaching the beast. It's trying to limit the amount of risk that you're exposed to. And it works really well. And that's what we're going to be focusing on because this channel is about my long and short portfolio. I'll show you the other account as well, which is long only. But that has a lot of stuff from Seeking Alpha Picks, which is a paid subscription, and I have to look if I can actually show you that information legally without breaking some thing that I may have signed with these people, and I'll check into that before I do that. But my long and short portfolio, that's my portfolio, and I can do whatever I want with it. So I will be showing you that for now. I just don't want to get in trouble with somebody that I'm already showing their website. I'm now exposing one of their paid services for free, which is not cool in my eyes. I shouldn't be doing that. So I will not be doing that. And that's that. Yeah. So why would I not want to purchase gold? Buy gold, it's going up. Well, instead of buying gold, which returned in 1 year 69.53, let's just call it 70. If you look at SSRM, one of the companies that I'm currently invested in, they mine gold, silver, copper, nickel, whatever comes out of the ground, they can smelt it and make profit from. And also gold. Not to mention silver's been doing really well lately. SSRM. Their return this year is 197.4%. And yes, it's been a little choppy at the end. That's just one. But I have a few. And if we go to margin long, this is my current long portfolio. That's upgrades and downgrades. I'll be getting rid of Wayfair because I think they're turning around and now their new rating is sell. I don't want anything that anybody has anything bad to say in my portfolio. And the quant rating is down. Sorry, not quant. The analysts have sold it. Rated it as a out of the sell. Sorry, I'm a little nervous. I don't usually do these videos. It's hard for me to speak in front of the camera. I'm not even looking at the camera. I'm just looking at my screen where my cursor is. But uh, I just want to share something with you that could possibly make you money, and this is a good place to start. Um, so there's up and down grades, but let's go back to the portfolio. This is the actual portfolio, not the downgrades, not the upgrades. The total change, total percentage change, today's gain. We have, percentage changes, after hours change, and all the values that I set up to look at. And if you look, there's a lot of information here. The annual, the weekly, monthly, 6 months, year, 3 year, 5 year. What are their grading based on the quant? Pretty much I want to see as much green as possible across all this on a long portfolio. Their market cap, upcoming announcement date for earnings, earnings surprise, like their last, did they outperform what they projected, or did they, they fall? It's just called falling, whatever. Public speaking, man. I'm here, and I don't know. Maybe I'll get better at this. It's been a while since I've recorded any of this, so I'm sure I'll get better at it. But if we were to go by sector, going back to materials, and I have some exposure to mining. These are all mining company. If I go to Barrick Gold, I purchased that at 38. It's worth 48 now. That's a 26% return. There's other, like, all of this is mining. And I'm just taking like 25 to 30% of my portfolio, long portfolio, and exposing that to gold. That's pretty much what I've done over here. But not for a year. I've actually had these for like 200 days, half a year, not even half a year. I'm slowly adding to the materials. And my returns are not like 190, like, SSRM or whatever. But, in that time, I've outperformed the gold. That's what I'm trying to look at. Just by looking at the King Gold Cross Corporation, they've done 229. I mean, I've gotten somewhere over here, so I've done okay. I haven't been there the whole time for the whole year, but I've done really well. And if I were holding gold for that long, I would have had less. So your gold exposure is not necessarily in gold only. It could be the mining, it could be in something that produces something for the miners, the equipment maybe even that's for the miners. Because those guys are going to be doing much better. If the gold is climbing, everybody wants to mine gold because there's money in the ground. And equipment needs to be used. And so those guys tend to outperform as well. So multitude of information. You can look at the stock at 5 years, 10 years. You can look at max, like what's going on. Like every time there's turmoil, obviously in financials, you see what gold does, right? Anyway, what else do we have to look at? We've been through the top. Every one of these is broken down into subgroups. So summary has a lot of analysis, comments from other users. There's news. You can actually look at all the news coming out. And by the way, whenever you're reading these, you click on any one of them, it actually takes you right to that ticker. So there's no entering. Like you're reading an article, which is integrated with AI, and it gives you like, let's see the KGC summary. And this is an AI generated summary of the company, and it just gives you like a beautiful report. And what are the dangers, what are the pros and cons of everything. There's press releases, there's related analysis, there's SEC filings like we spoke, and then let's just look at all. And this will give you everything that's being reported. Transcripts and insights. This is where you can go and listen into actual phone calls with the CEO and chief financial officer and anybody, involved in that phone call. And you can actually, if you're an investor with the company, you can dial in and talk to them and ask them questions, which is pretty cool. comments. But that's seeking alpha, right? And then I'm just looking at one stock over here, and the video's already getting long because I'm rambling and all over the place. But this is a great tool for choosing the right stocks. And the way I actually do it is if we go to Stock Screener and we go to My Screens, I have long. This is how I rank my stocks, top stocks, with their screener by adding some filters. And we can go through doing the filters in another video, but according to my filters, these would be the top companies to at least take a look at, and they may not reflect what I'm looking for, but they're all above 1 billion, and some of them are 408. Some of them are going to be in the trillions eventually. I mean, if it's one of the Magnificent Seven. But let's look at MU, Micron Technology. They're in semiconductors. Return on common equity is 22.5, which is above 15, which is what I like to look. Their 24-month beta is 2.6, meaning this is a big mover compared to S&P 500, so there's opportunity here. But the price is at 362. So if I were to technically buying it with the size of my portfolio, where it's at right now, I could probably buy 2 of these because I limit my exposure to less than 5% at all times. Like it's, if I can stick to 3, that's even better. But the lower the better because you can diversify this way. Sorry. So let's go back to MU. What I want to invest in this, you see what the price does right away. And this is just because their quant ratings within the system itself show it. This is actually #1 stock on Seeking Alpha right now, according out of United States, that is being pushed right now. So the screener pretty much lines up somewhat with what the quant rating, if I were to just go to the stock screener again and choose all stocks, like rank them by the best stocks. And this is what Seeking Alpha does right here. It has MU right at the top, and there's more over here, but let's go back to mine. And I like to look at mine. And then there's Nutex Health, NUTX. Let's look at this guy. Price choppiness, I don't know. It could be a good one. I try not to do too much of healthcare because it tends to be choppy. So let's stay away from Nutex, even though it ranks #2. Alcoa Corporation, aluminum. Okay, return on common equity, 19.47. It's above the 15. It's above what the volatility for S&P 500 is. I like that. And then let's go Alcoa. Once again, look at this price action. Is this right away something I'd be interested in? 100%. I already love the price action, and the fact that it bounced back a little bit doesn't necessarily mean that it's falling on its ass. This could be just a correction and then the best place to enter. On something that's constantly climbing, like the S&P 500, the best entry points are the pullbacks. They're not at the top when everything is all high and mighty and everybody's making money. The best opportunities for making money is when these pullbacks happen. This pullback right here may be smaller. Like if you gotten out over here, you would have made money like a year later over here. If you gotten in over here, you would have made money pretty much all of 2025, right? Is it always foolproof? Definitely not, but your best entries are not at the tops. They're always at the pullbacks. And when you see a 10% pullback, you almost always want to buy something. If it has good financials. And Alcoa, I bet you, has really good financials. Look at those numbers. Just look how smooth the reporting is. And this is annual or trailing 12 months by quarter. So if we look at the income, see that over the last 3 quarters, 4 now, they've turned profitable, losing 823 million losing almost 1.5 billion in that quarter to making over 1 billion on a quarter basis. And this number is growing. And this is, once again, 12-month momentum increasing, which is exactly what you want to see. This is really good. You look at their earnings revisions, 6 revisions up. Okay, other people are also estimating that this thing's going to go up. You look at quarterly, 6 revenues up. Yeah, that looks great. Profitability, return on common equity, 19.47, like we mentioned earlier, above the 15 mark, which I like to see. And the sector median is 5.3, so it's better than the sector. Yeah, this is a great one, and I would definitely put my money on it. Except the portfolio is completely loaded, and there's no room. That's the problem. Anyways, let me show you the long and short portfolio here. This is You'll probably recognize some of this. Like if you look at this page here, you'll kind of recognize from what it used to be. The reason it's changed is because I've migrated my Excel to Google Sheets, mainly for the ease. It wasn't easy to transfer. I had to like relearn Google Sheets, but whatever, it's still in the process of being developed. But what this does is it allows me to automate a lot of the things that I had to manually upgrade. And so every day I would come in, I would have to like manually download every single query that I've had in the Excel. Whereas now it's all automated. And I just click on the summary and I see this being repopulated automatically on its own by using not queries, but scripts. And so this is what I'm doing now. This is the same thing that you've seen before, except automated, and I don't have to have access to so many different web pages and keep on updating. I'm literally using Google Sheets and one of the web pages that I just showed you to get information, mainly FinWiz, this one. On any sticker, there's a nice little table right here. And you can actually download this table and put it on your Google Sheet automatically, which is what I'm doing. And it just gives you all this information down here, all of this, which is updated every single day for free. Phenomenal. I mean, if you can organize that info, that's a lot of info right there. But let's go back to long and short portfolio. And so what I do is I import that table to the right side under my long and under my short. And I have all this data that I can pull back and show on my summary page, which is all the info I want to see. I want to see increasing numbers and decreasing numbers. So increasing here and decreasing here. And if you go through all these annotations, you'll see which numbers correspond to what. Just pause the video, take a look. I can share this with you guys later, but this is what I've been doing, and I've been keeping track of all my stocks, long and short. What we have is Tigo and CCI. This one is CLS GIS, which is Celestica versus General Mills. And I've done videos on how this works here. And this is just an update. Summary, currently, this is what we're doing. This is once again only the long and short portfolio, the margin account, and I've been recording it for a month now. I just want to show you like it's floating profits instead of 660. You see right now what's going on. This is automatically a script is running in the back. It's pulling information from all of these automatically and then repasting it right here and updating it every 5 minutes. So once in a while you see this like going back and forth. This is just so I don't have to click update, which was so redundant. Now I just leave it and it does what it does. I come in at the end of the day, it's updated automatically. I have up-to-date information. I have to spend 20 minutes updating every single sheet like I did with Excel, which was horrible. Don't want to do that no more. But this is where we're at. And what's the status on the account right now? Can I show you that? I'm gonna have to edit some things out maybe. Uh, no, let's not show that. The exposure. Let's get back to exposure. Exposure on whatever I have invested. It's currently like 29.6, so almost $30,000 US. This is not the equities value. Equities value right now is like 33.7 thousand. I'm utilizing over 90% of my money to invest. Like I got money put in all over the place. And if you look at margin long, there's 15 positions there. And if you look at margin short, there's 15 or 16 there as well. And you can actually see that right here, 16 and 15. I'll be taking Wayfair out so that they're 15 and 15. But here's TFSA only, that's 50 symbols. These are 50 stocks, long only. And I will not be sharing that because, like I said, I might be in trouble for that. There's a lot of stocks in here which are coming straight out of Alpha Picks, which is a paid subscription, and I don't think I can show you that stuff. I can show you what I have in my portfolio because I've created that myself, but that one probably not. So we'll stay away from that one. Um, Upgrades and downgrades, you know, that's another thing to look at, but amazing stuff on this webpage. I just can't give it enough. Exclusive coverage. Um, Short ideas are really hard to find, but like this gives you short ideas based on some analysts that you get articles. Let's just look at the first one. The analyst gave it a sell rating and it gives it reasoning behind it as well in the analysis, which is also listed here. You can click on that article and figure out what this guy has to say. Most of the time, I do not make my decisions on these guys' videos or whatever. I do not make any money from following what other people say. I try not to. The most popular thing is usually the thing that's going to wipe you out. What you need to do is you need to focus on the numbers, the fundamentals. We'll make more videos on that. I'm just all over the place. I'm just welcoming back. It's been a while, but for the last 4 years, I've returned about, what is it, 18% annually. There's been up and down, but on an average 18% doing this, and it's not bad. I want to see 24, 25, 30 this year if possible. But it's a safe way of doing it, long and short instead of just long only, which is really choppy when the market is down. Whereas the long and short portfolio kind of steadies things out and it's pretty flat. Yeah, that's Seeking Alpha. The next video is going to be on showing you the exact stocks. We'll go back to the long and short portfolio. I'll update this to reflect like what's the equity status. Maybe we'll break it down to the margin so you actually see the numbers for the margin account. Like right now in the margin account, I believe there's about, I don't know, $6,000. So that $6,000 is going to be reflected here, and you can see that number grow instead of the whole 30, which has the other account with it. It's the overall thing. Essentially, we've gained like 18% year over year for the last 4 years, and welcome back. Let's continue with that, and hopefully I stick to my word and show you everything that's in here. Okay, I think that's it. Thank you for watching. I'm going to upload this video now, and you see the numbers are automatically updating themselves over here. And then all of this repopulates on its own, which is exactly what I was looking for. Honestly speaking, I was spending way too much time updating my spreadsheets. It was taken away from the time that I should have been spending using web pages like this, using their screeners. And I will get into free options of doing this, but Seeking Alpha, amazing. Amazing. Very good job, guys. I use it every single day. And I hope there's more great things to come because everything that comes out on this webpage is just you know, I get butterflies in my stomach. Thank you very much, Stephen Kress. Thank you very much, team. You guys are amazing. This is a great service. Talk to you soon.